Uncovering HSBC's dark financial empire. The untouchable bank. One of the biggest banks and financial services companies in the world, HSBC, has a lengthy history of controversy stemming from its involvement in a number of financial scandals. From its beginnings in the opium trade to its current position as a major international bank, HSBC's activities have frequently drawn criticism. By exposing its involvement in money laundering, regulatory evasion, and continuous monitoring, this overview reveals the darker sides of HSBC's financial empire and presents an image of an organization that has successfully walked the tightrope between legal banking and illegal activity. Number 7. Historical background. Scottish banker Sir Thomas Sutherland established HSBC, formerly known as the Hong Kong and Shanghai Banking Corporation, in 1865, with the primary goal of promoting trade between Europe and Asia. The bank was founded when British colonial interests in China grew, especially during the Opium Wars, when British traders tried to make money off of the opium trade. At first, HSBC concentrated on offering financial services to traders involved in this profitable industry, swiftly forging a solid presence in Shanghai and Hong Kong. As time went on, HSBC expanded into a number of industries, including wealth management, retail banking, and investment banking. As a global financial behemoth by the end of the 20th century, HSBC acquired many banks around the world, including Midland Bank in the UK in 1992. Through this transaction, HSBC was able to take advantage of Midland's existing clientele and greatly expand its footprint throughout Europe. Today, HSBC employs more than 230,000 people and conducts business in more than 60 countries. Although its extensive network and wide range of services have made it a vital force in global finance, its history is still heavily tarnished by its colonial past and contentious business methods. Number 6. Money laundering allegations. When investigations showed that HSBC had helped drug cartels, especially the Sinaloa cartel in Mexico, launder billions of dollars, the money laundering accusations against the bank gained significant attention in 2012. Hearings held by the Permanent Subcommittee on Investigations of the U.S. Senate revealed how HSBC's Mexican affiliate permitted drug traffickers to deposit substantial quantities of money without sufficient oversight or notification to law enforcement. There was proof that HSBC transported over $7 billion from its Mexican branches to the U.S. without enough supervision between 2006 and 2010. Despite being aware of the risks involved in its activities in Mexico, the bank allegedly disregarded many warning signs about suspicious transactions and neglected to put in place efficient anti-money laundering systems. The integrity of the global financial system was seriously threatened by this systemic failing, which also made it possible for criminal businesses to flourish. Widespread public indignation resulted from these disclosures, and calls for stronger rules on financial institutions around the world were sparked. The controversy brought to light how, if big banks do not uphold strict compliance procedures, they may unintentionally turn into conduits for illegal activity. Number 5. Panama Papers scandal. The Panama Papers publication in April 2016 revealed a massive global network of offshore tax evasion schemes involving HSBC and other well-known people and organizations. According to the leaked documents, the private banking arm of HSBC actively helped affluent customers open offshore accounts in tax havens like Panama in order to evade income taxes and conceal assets from the government. Investigative journalists discovered proof that bank staff members advised customers on how to set up intricate arrangements intended to elude regulatory scrutiny while supporting frequently lawful but morally dubious tax evasion schemes. In addition to exposing HSBC's role in aiding tax evasion, this scandal brought to light the morality of banking operations that put profit before of social responsibility and legal compliance. The public's response was prompt. Many saw HSBC as representative of a banking system that allows the wealthiest to evade taxes, while ordinary individuals are forced to pay taxes. This controversy led to calls for greater responsibility and transparency in the banking sector, as well as heightened scrutiny from authorities around the world. Number 4. Regulatory scrutiny. Due to its role in tax evasion and money laundering incidents, HSBC was subject to strict regulatory oversight from numerous international authorities. U.S. officials declared in December 2012 that the bank will face severe fines for violating U.S. sanctions rules against nations like Iran and Sudan, and for failing to maintain sufficient anti-money laundering measures. Investigations showed that without proper oversight or reporting procedures in place, HSBC had permitted billions of dollars worth of transactions connected to these sanctioned nations. HSBC agreed to pay $1.9 billion, a record amount for a bank at the time, to settle these claims as part of a settlement deal with U.S. regulators, especially the Department of Justice and the Office of Foreign Assets Control. This settlement demonstrated the seriousness of HSBC's non-compliance, as well as the necessity to more robust regulatory frameworks to stop future instances of this kind of misbehavior. Along with financial fines, HSBC had to carry out extensive reforms to improve its risk management systems and compliance standards. This process required major adjustments at several organizational levels. Number 3. Compliance failures. Serious questions concerning corporate governance and risk management procedures within one of the biggest banks in the world were raised by the investigations into HSBC's operations, which exposed significant compliance lapses at several organizational levels. Internal audits revealed that, despite the implementation of anti-money laundering policies and procedures aimed at thwarting illegal activity, these safeguards were frequently either ignored completely or insufficiently enforced because of a culture that placed a higher priority on revenue than compliance. Employees said they felt under pressure from management to put corporate expansion first at all costs, which caused many employees to ignore or underreport suspicious transactions out of fear of consequences or losing their jobs. Number 2. Ongoing controversies. Even after resolving previous accusations and enacting changes meant to enhance compliance procedures, HSBC is nonetheless embroiled in ongoing disputes about its business practices and moral standards in a number of international markets. Critics contend that although the bank has improved staff training programs and addressed some of its compliance difficulties, it has not completely changed its corporate culture or risk management procedures, which are essential for successfully preventing future wrongdoing. It is unclear whether HSBC has truly learned from its mistakes or if it will continue to face similar problems in the future, given reports that it has continued to work with clients connected to questionable activities or jurisdictions with lax regulatory oversight. Number 1. Public perception. The public's perception of HSBC as an untouchable entity in the global finance industry has been greatly influenced by its past wrongdoing and ongoing controversies. This perception has been further supported by the company's ability to handle serious allegations without suffering significant long-term repercussions beyond the financial penalties imposed by regulators around the world. Given recent revelations highlighting systemic issues across multiple banks globally following events like the 2008 financial crisis or subsequent scandals involving other major players like Deutsche Bank or Wells Fargo, many see HSBC as representative of a banking system that puts profit before ethics. This further erodes consumer trust in financial institutions as a whole. Many people feel disillusioned with an industry that is thought to operate above accountability measures intended for average citizens, and this negative perception is further exacerbated by media portrayals that highlight its involvement in scandals like money laundering or tax evasion, while ordinary citizens are subject to stricter scrutiny from tax authorities regarding their own finances. The story of HSBC continues to be closely watched as calls for increased accountability in the financial sector, driven by movements supporting ethical banking practices, become louder. This has sparked conversations about what responsible behavior among today's major financial institutions looks like. It is unclear if the bank will be able to win back the public's trust as it works to change its operations and deal with constant monitoring. Thanks for watching our video, and don't forget to subscribe.